Hello and welcome back to Market Brief After Hours. Today's session was defined by a serious game of push and pull. We had inflation data cooling off on one side, and then a wall of worry regarding corporate earnings and political policy on the other.
That's exactly right. It was a classic mixed bag. You had investors trying to celebrate better inflation numbers, but they kept tripping over headlines coming out of the financial sector and some escalating geopolitical tensions. It felt like for every step forward in the data, the sentiment took a half step back.
Let's dive right into the headline numbers, because the U.S. indices really struggled to find a direction today. It seems the banks were the heavy anchor dragging things down.
They certainly were. The S&P 500 finished the session in the red, closing down 0.19%. To give you the specific level, we wrapped up at 6,964. It was a modest pullback, but when you look under the hood, it was really driven by a sell-off in major financial institutions.
And the Dow Jones usually feels that pain the most when the big banks stumble.
Absolutely. The Dow Jones Industrial Average shed about 398 points, dropping 0.8%. It closed the day at 49,192. You had heavyweights like Goldman Sachs and JPMorgan Chase really weighing on the index.
We will get into the specifics of JPMorgan in a bit because there is a policy angle there. But how did the tech sector hold up? Usually, if rates are looking better, tech likes that.
Tech was resilient but not immune to the general cautious mood. The Nasdaq Composite recorded a marginal decrease of 0.1%, settling at 23,710. So it outperformed the Dow significantly, but it couldn't quite claw its way into positive territory.
Now, you mentioned better inflation numbers earlier. That usually gets the market excited because it implies the Federal Reserve might take it easy. What did the data show?
The data was actually quite encouraging. We got the December Consumer Price Index, the CPI. The core inflation, which strips out volatile food and energy, rose 0.2% month on month. That was slightly below expectations. On a yearly basis, core CPI is at 2.6%.
And the bond market reacted to that immediately, right?
It did. Treasury yields fell. The benchmark 10-year Treasury yield dipped to 4.175%, which is its lowest level since early January. The 2-year yield also dropped to roughly 3.528%. Essentially, the bond market is looking at that soft inflation print and betting that the Fed has room to breathe.
So we have falling yields, which should be good for stocks, but the stocks dropped anyway. That brings us to the elephant in the room, or perhaps the donkey and the elephant, the political landscape and the banks.
Right. This is where the narrative gets messy. Despite the good economic data, financials took a hit because of policy concerns. Specifically, there are fears regarding President Trump's proposal to cap credit card interest rates. JPMorgan Chase's CFO explicitly mentioned potential industry opposition to this today.
That explains the disconnect. The macroeconomy looks okay, but the regulatory environment for banks just got a lot cloudier. Let's shift gears and look overseas. While the U.S. was fretting, Asia seemed to be having a much better Tuesday.
Night and day difference. Asia-Pacific markets rallied, largely ignoring the geopolitical stuff that bothered the West. Japan was the star of the show. The Nikkei 225 jumped a massive 3.1% to close at 53,449.
3.1% is a huge move for a major index. What sparked that?
It was a mix of catching up after a holiday and domestic politics. There are expectations that Japan's ruling party might call a snap election in February. Markets often like the certainty that comes with a fresh mandate. Plus, tech heavyweights like SoftBank and Tokyo Electron had a fantastic session.
And elsewhere in the region?
Broadly positive. South Korea's Kospi added nearly 1.5%, and Hong Kong's Hang Seng hit a 2-month high. There was one standout story in Hong Kong, a Chinese semiconductor firm called GigaDevice Semiconductor. It debuted today and soared 50%.
50% on day one? That is a warm welcome.
Incredible demand. It shows there is still a massive appetite for semiconductor exposure in Asia.
Let's swing back towards the West and look at Europe. Was it as exciting as Asia or more subdued like the U.S.?
Definitely more subdued. Europe finished mixed to flat. The Stoxx 600 edged down about 0.2%. Investors there are very focused on the geopolitical situation in Iran and, interestingly, the criminal investigation involving U.S. Fed Chair Jerome Powell.
Give us the numbers for the major hubs.
London's FTSE 100 was basically flat, down just a fraction at 0.03%. The CAC 40 in Paris fell 0.12%. Germany's DAX managed to squeeze out a tiny gain of 0.08%.
Any specific companies making waves in Europe?
Yes, Ørsted, the Danish wind farm developer. Their stock surged 5.4%. A U.S. court ruled in favor of their $5 billion project, which is a huge relief for them. On the flip side, we saw some weak retail data from the U.K. December spending growth was the slowest in 7 months.
That cost of living crisis is still biting at the consumer heels. Speaking of costs, let's look at energy. Oil prices jumped today.
They did, and this is purely geopolitical. President Trump announced he's canceling meetings with Iranian officials and pledging support to protesters there. That escalation of rhetoric spooked the market regarding supply from the Middle East.
So what are we paying for a barrel now?
U.S. crude, WTI, rose nearly 2.8% to settle at $61.15 per barrel. Brent crude is back up to $65.47. It's a reminder that political headlines can override supply and demand fundamentals in a heartbeat.
We are going to take a very short break. When we come back, we'll get technical with the Forex markets, looking at those moving averages, and break down the biggest individual stock movers of the day, including a massive jump for Moderna. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the broader indices and the oil spike. Now, let's get into the currency markets. For our listeners who track the technicals, we saw some interesting interaction with moving averages today.
We certainly did. It was a busy day for the charts. Let's start with the euro against the dollar. The USD drifted lower, closing at 1.1648.
And looking at the chart, that seems to be right on a key support level.
Spot on. It closed just beneath its 50-day simple moving average, which sits at 1.1646. It's also below the 100-day average. However, the long-term view is still technically bullish because the 200-day average is way down at 1.1573. So we are seeing a short-term pullback within a longer uptrend.
What about the British pound?
Similar story. GBP USD declined to close at 1.3432. It's been sliding since late December. However, it is still trading above all its key averages, the 50, 100, and 200-day lines. The 50-day SMA is at 1.3302, so that is your line in the sand. As long as it stays above that, this is just a correction, not a crash.
And the Japanese yen?
With rallying, what did the currency do? The yen weakened, meaning the USD JPY pair rallied. It closed at 159.11. This pair is in a very strong bull run. It's trading well above its 50-day SMA of 156.85. When you see price action this far above the moving averages, it shows strong buying conviction.
Let's touch on the Swiss franc quickly.
USD CHF had a bounce, rising to 0.8006. It broke back above its 50-day average at 0.7992. It's trying to reverse a downtrend, but it has a lot of work to do to clear the long-term resistance.
Okay, let's look at the shiny stuff, precious metals. You mentioned gold pulled back a bit?
Just a touch. Gold closed at $4,586. It's seeing some profit-taking after hitting recent peaks, but technically, it's rock solid. The 50-day SMA is way down at $4,245, so even with a dip, the uptrend is firmly intact.
Silver, however, didn't get the memo about profit-taking.
Not at all. Silver was the outlier. It surged 1.9% to close at a staggering $86.71. It hit a high of $89.11 during the session. It is trading substantially above its 50-day average of $61.66. The momentum there is incredibly strong.
$86 for silver is an eye-watering number compared to where we were a year ago. Let's move on to the market movers, the specific stocks that made headlines today. We touched on JPMorgan Chase earlier.
Right. JPMorgan shares slid over 4%. It wasn't just the credit card cap fears. They also reported that their investment banking fees fell short of expectations. When you combine an earnings miss with regulatory fear, you get a sell-off.
But it wasn't all red on the screen. Moderna had a massive day.
Huge. Moderna shares surged over 17%. The CEO, Stefan Bancel, gave a very optimistic forecast for 2025 sales, projecting around $1.9 billion. The market clearly liked that confidence.
Any other notable gainers?
Option Care Health. They provide at-home infusion services. They jumped 8% after releasing strong preliminary results for the fourth quarter. It's a defensive healthcare play that is performing well.
And to balance it out, who was the biggest loser of the day?
That unfortunate title goes to Travere Therapeutics. They tumbled 15%. They received a request for additional information from the FDA regarding a kidney disorder drug. In the biotech world, an FDA information request is rarely interpreted as good news. It implies delays or doubts about clinical benefits.
Biotech is always such a high-risk, high-reward game. So looking at the big picture as we close out, we have cooling inflation, which is great. We have strong tech demand, especially in Asia and chips. But we have a banking sector that is nervous about Washington and oil markets nervous about Iran.
That is the summary. The market is trying to figure out which force is stronger, the economic fundamentals, which look decent with lower inflation, or the political risks. For the next few days, I'd suggest listeners keep a close eye on any further comments from the Fed to see if they confirm the pivot narrative, and obviously watch the headlines coming out of the Middle East.
And of course, we will be here to break it all down for you. That wraps up our session for today. It's a complex market, but we hope we made it a little clearer. If you find this useful, please follow Market Brief After Hours on your preferred podcast platform. We'll catch you tomorrow.